Carrie. Great to be chatting today on a topic that is so central to the growth of the connected economy, and that is identity in a digital world. How to collect the data that forms the basis for that identity, how to verify those credentials and validate it, how to authenticate that the person using that identity is in fact its rightful owner. So thanks for making the time.
Pleasure. As always, Karen, thanks for having me. Important topic nonetheless.
So important. And we're going to get into a lot of really interesting issues and topics. But I would say the broad theme is integrating identity with payments to enable the seamless, secure experience for the consumer and the relying party, but to do it in a way that businesses get only the information they need for that particular transaction. And importantly, that consumers understand and trust that that's how their digital credentials, that digital identity will in fact be used. So that's sort of the underpinning for the conversation. I want to start though, Carrie, by asking you a broader question. How are the conversations about identity today in a digital world different than perhaps they were even a year ago?
Well, first and foremost, it's the number one topic that we're seeing across any commerce or enterprise. And it's not just for facilitating transactions that drive economic value. It's also for facilitating interactions between businesses and their employees, between medical providers and their patients, between students and their teachers. And so what was once not really understood and maybe even questioned, cybersecurity, identity verification, is the number one sector that is getting not only the most attention, but a tremendous amount of investment as well. So at the forefront, it is top of mind for most. On a consumer level, we're starting to see much more desire to be educated and to be aware. I think, Karen, even since we first spoke a couple of months ago, as we started down this relationship with the payments tracker, you're seeing, stats that show consumers 50 to 55% of them, are very, very concerned about how their data is being used by any brands that they interact with. And so there's this acceleration of awareness and an acceleration of investment. And most importantly, an acceleration of trying to drive a deeper understanding of how do you create a more secure and inclusive world where commerce can happen, as seamlessly as possible.
The thing that is so interesting, and I want to couch the part of our conversation about what should we be talking about in the context of data. So we did this 15,000 person study of U.S. consumers, and we asked them questions about how connected they want to be in this connected economy. And we learned a lot of things. We learned that just about every single person, in the U.S. is actually connected in some way. 92% of consumers made an online transaction, more on online transactions than physical store transactions in the last year. 86% of people paid a bill online. I mean, think about that. 67% of people in the last year engaged with a healthcare provider online. 40% of consumers shopped for groceries online. So these environments where consumers are engaging has just exploded. And so when
2/3 of them don't see them going back to the original way of living. I mean, it's not only just a pivotal shift, it's one that's going to sustain the test of time.
For sure. It's become the new habit now. So when you think about all of those online interactions that are only going to grow and across lots of different other parts of the connected economy, what should those conversations be with different stakeholders in the payments and broader ecosystem about creating, validating, and authenticating identity?
It's a very deep question because there's so many facets to it. As you know, there's what is the information that should be captured in order to complete the transaction in the context of what you're trying to complete it. It's what information that is exposed or given and how is it stored and encrypted in order to ensure safe of use and transmission. And in doing that, educating the end person or the end consumer of how they can get access to that information if they want it. And I think even a broader conversation, what we're seeing, accelerate is around verifiable credentials. So this whole notion now where the technology exists and it has existed for a really long time, but how do you credential someone or something without actually having to expose personal identifiable information? Mm-hmm. And to do that, it requires a new ecosystem around interoperability. I mean, I liken it very much to what happened in the payment sector. You had a few networks that are out there in the US and global. You had faster payment networks that were starting to become interconnected, so you could move money no matter where you are in the world to anybody you wanted to world. You had unique identifiers that, first started out as a 16-digit PIN and then was username and password and then became your mobile phone number. And, you fast forward that and you look at the patterns of how does that then apply to the identity space. And in a world where what we want to do is figure out how you tokenize your identity, and then you and only you can share what you need to for that context, it's going to require not only the big techs, but governments as well to start to play a much bigger role. And the US is behind in this space, similar as they were in the payment space. You're seeing governments play a very active role around the world in trying to figure out how do we do this safely, particularly as we've all become, more habituated to being online. I think the US there's a, bill on the Hill around the Digital Identity Act, which is trying to break through in how we do this safely. But it does become an equation of many and not just of one in order to crack this.
But you talk about the evolution of payments as sort of the model, and you think about the infrastructure that enables the connections between consumers and businesses and businesses and businesses. But there are parties that issue payment products. Mm-hmm. Who's issuing these digital credentials?
Yeah, we don't know yet. I mean, who that issuer is and how does that issuer and the brand associated become a trusted owner of this credential is yet to be seen. I mean, the way that I look at how the market's emerging right now is you've got players such as us, who've been in the space of identity verification for 20 years. And it was all about establishing that a physical identity is connected to a digital identity. And there's high level of assurance of that. But because of this emergence to us being more digitally dependent and the importance that payments plays in this new modern economy, you're seeing a lot of big tech players take a stab at this. So, Microsoft launching their verifiable credentials initiative and trying to do it independent of the Microsoft brand and on blockchain and some of the newer technologies. Apple, in their recent developer conference, made an announcement of being able to store your government issued identity in the Apple wallet. Now they take it from a position of, they're not going to access that information. They don't know what that information is, but at the same time, could they then be the issuer of this credential in time, of course. And so and then where, as I said earlier, is the government the issuer of that? I think the pandemic has really, at least in the US, I think put a lot of question marks over how the workflow processes and the way in which the governments collect and then distribute funds, and doing that based on who somebody is and what their claims are, clearly have been broken. And it's created a mechanism where we're, all more focused on what do we need to do to get this right. And I don't think it's going to be the public or private sector. It will be both. Mm-hmm. But what we need is to figure out an interoperable standardization of how we share credentials, knowing that it won't be one winner, it will be many.
When you think about, though, this connected economy and this notion that consumers, at least what they say, that they like convenience, they're worried about security and privacy. I'll touch on that in a minute. But this notion of having, the aggregation of activities in an ecosystem where a credential allows them access that has the relevant, payment and other identity credentials associated with it, seems to be something consumers want. There's different degrees of how broadly connected consumers want. It reminds me of, remember back in 2006 when there was login with Facebook? Like that was, remember that? Totally, right?
Yeah.
Did you ever do that? I never did that.
I never did it. No, I was at PayPal at the time though. And I was always a big believer, maybe, why can't it be log in with PayPal? We have your financial credentials online. So why would consumers trust us to do that? So no, I didn't do the Facebook thing.
but it's kind of started there, which was the friction was, filling out all the stuff, just log in with Facebook. Of course, the merchant gets a lot of data, Facebook gets a lot of data, everybody gets a lot of data, but the consumer, got a convenient access. Fast forward to today, and to your point, there are big tech, single sign-on, log in with, but then you also have payment credentials. So PayPal is a credential, speaking of PayPal, that allows you to pay at merchant sites. Amazon Pay allows you to pay off of Amazon. That's a credential. I think about Clear. That's a credential that allows you access to airports, airport security. There are a lot of these different fragmented aspects of your identity that I wonder, is that how this is going to evolve, or are we going to find that identity becomes less fragmented and more interconnected, to your point, and it makes it easier for the consumer, but also easier for the relying parties too?
I believe it's both, in the sense of we are going to see consolidation in the market. We're starting to see consolidation in the market. There needs to be consolidation in the market. I mean, part of the reason why we've seen a 300% increase in fraud, and part of the reason why 1 in every 10 people have had their identity stolen, whether they know it or not. And identity not necessarily being your name, it could be social security number, it could be a mobile number, it could be a whole host of attribution of who you are and someone being able to impersonate you. There has to be consolidation, because data needs to start to be consolidated in order for us to understand better how to catch the fraudsters. And I think in businesses, to try to understand their consumers. I mean, one of the reasons why there is so much fraud in large enterprises is the behaviors, the attributions of individuals and consumers are siloed. So they're unable to look across the different data sources in order to come forward with some sort of answer or prediction of, is this person who they claim to be? So I do think there will be consolidation, but I've had this theory for quite some time, probably 7 to 10 years, and I'm interested to see if it proves out. But I think you're going to have micro identities. So I believe there'll be a world where you have your social identity, you have your financial identity, you have your behavioral identity, you may have your professional identity, your personal identity, your family identity. And because each one of those acts differently depending on what you're trying to achieve, and to the notion of, I only want to give the information I have to get access to what I'm trying to attain. And not that your personal identity doesn't connect to your professional identity, but for all intensive purposes, in personal transactions, the way you live and way you play and your family, you tend to not have to get access to your workplace. And so, I often wonder, in a ecosystem with a number of nodes, and each node being a different type of identity you have, what you really need to do is then connect them, but you can still have some sort of isolation and therefore protection. But just, I do want to comment back to your log in with Facebook, or log in with Google, or there's all these log in with now, depending on whatever the affinity is to that particular brand. When you look at how many data breaches there have been, and the fact that, people's passwords and their user IDs are getting sold left and right on, the dark web. The reality is I think passwords as a means of security is a bit of security theater. It's really not that secure. It's not. And so this is why we're seeing a movement towards, passless or passwordless authentication. And it comes with, you talk about assurance levels, Karen, and you're right. You could detect right now using behavioral biometrics that my phone is probably my phone, the way I hold it, the way that I use it, without me doing anything. But for me to get access to certain things using a biometric picture, will then allow me to get further access. And so I think far too often we've kind of put too much emphasis and investment in, password protection and changing your password. The reality is it's not that secure. And so we have to find new ways. And then I think you start to ask yourselves, again, modeling it after the payment sector, is, well, maybe I only need to be authenticated when there's some abnormal behavior. Why can't I just move throughout the day as myself. And then be prompted, just like you do in the credit card industry, if there seems to be something that's out of context or something, a transaction you're trying to complete. And then you start to really think about a frictionless existence. And that is quite exciting.
It is, but it's that talk about change in behavior. I think, no consumer likes the ongoing, like you have to give this information and that information in order to get access, but not having to do anything. I don't know. That means you have to really trust that particular, wherever it is you're transacting, you have to really trust that. And I think consumers do trust today, a lot of the payment activities with the financial institution because they trust their bank.
Yeah. Or their alternative bank, whatever they're choosing to use. But I think it was 4 or 5 years ago when I was at Citi and we were driving the disruption of the bank of moving, all the bank services and processes online. And we did some research because people still didn't believe that banks would be trusted. And I think it was 65-70% of consumers said that if they had to aggregate and give their data beyond their payments information to someone or their banking information, it would be their financial sector because there's a perceived sense of trust and it is regulated, which by the way is a whole nother conversation we could have about what does verification mean in regulated versus unregulated spaces. And I just want to correct you though, like I don't say you don't do anything. I do think that there is moments in time where people have to be re-verified or you have to be preemptively asked, are you? Because you're getting access to something that may be more economically meaningful or have a downstream effect on your life, other lives. We can talk about the COVID vaccination passports, of course, but I do think that this more passive way of verifying where you could be verifying behind the scenes every few minutes without the consumer taking any action is something that I think will drive a different way of interaction. But I agree, it is about trust. Trust is the anchor of our existence today and our future existence tomorrow. And that's why what you do with information, how you respond when there is a breach, how you protect your consumers, your employees, and your businesses has never been more important.
Right. Let's talk about some of the sectors. You talk about regulated, unregulated, and verifying identity. Let's go down some of the interesting segments and use cases where you have seen this notion of identity kind of taken to a best practice level. Can we talk about crypto? Why not?
Sure, why not? Everybody else is.
Start with that. I usually end with that, but I want to start with that because
that's good.
Seems like fun. So 16% of American consumers either currently own or have owned crypto. That's
wow, I didn't even know that.
It's from payments.com, Carrie. Really.
I know. I read everything, but I can't, consume everything. So, biggest fan.
Thank you. But seriously, it's and growing. That was back in April. Who knows what it is today? I'm sure it's even more. And you have consumers opening up accounts and storing balances, and you've got the crypto exchanges, under a lot of scrutiny for making sure that those people are in fact legitimate people, all of whom are very new to the new platform. What's going on within the crypto exchange world to make sure that they are doing all that they can to verify the identity of their new users?
Yeah, I've each one of them are taking a different tactic, but all of them recognize the importance at some point in time, whether it's pre-trading or buying crypto, or it's, trying to disperse the money that you made from crypto into your bank accounts, that you've got to verify individuals. And some of them are doing it better than others. My husband started to get very intrigued by it earlier this month. So now we're one of that 16% where we weren't before. I was always fascinated with the technology, hadn't yet bought into an alternative form of currency because we kind of already live in a digital currency, at the end of the day. But and it was fascinating to use 3 or 4 of the different crypto exchanges. And some of them, it took 7 days in order to verify you to open up an account, which in the world of crypto, when the market never shuts down, it's 24/7. And there's so much volatility that, if you don't buy at the right moment, you miss out. You completely miss out from one day or another. And so that type of delay is not accepted. And I don't think drives the right type of engagement. But They're increasingly more and more concerned, even when those that are not regulated or those that are taking different tactics, in semi-regulation. Because I'll tell you what we've seen internally. So we have the good fortune of enabling many of those crypto exchanges. And candidly, during COVID, when you saw a lot of our competitors that could no longer sustain the service because they were dependent on individuals doing the evaluation of the verification, and we are fully automated, as you know, and we had a number of the cryptos come to us to ensure that we could service them, particularly when Elon Musk may do another tweet and it goes up 700%. So
we're down.
Or down. Yeah, exactly. Particularly now. So I just share that because at an aggregate view across many of the digital exchanges, we're able to see the patterns of what's happening. And from January until July, we saw about a 35% increase in fraudsters, in attempts for people to take advantage of the crypto exchanges. And interestingly enough, and this is what I always find fascinating about our field, people have these assumptions and these biases that these fraudsters are coming from third world countries or countries that, maybe are in the red zone or considered high risk. The reality is in that 35%, we saw, falsified documents coming from New Zealand. So there was a 12x increase from New Zealand, a 5x increase coming from Indonesia, a 5x increase coming from the Philippines. And even now on a day-to-day basis, we see a tremendous amount of fraud, even beyond the digital exchanges coming from Belgium and the UK and the US. And so it's a reinforcement, Karen, to me that we can't continue to live our lives under these same kind of constraints or beliefs that we had in the past. It's very, very different now. Mm-hmm. And in the crypto space, even more so, just because there's a desire to have, as a lot of anonymity. This is why one of the many reasons of why people use crypto. And you ask yourself, how much anonymity is enough? Or is it okay to a point where you're having a high risk transaction or a larger transaction, and then you need some sort of verification?
Yeah. So how are the exchanges, dealing with that? How are you enabling that?
We're enabling it in a couple ways. And so some of the exchanges, many of them, when you open up an account for the first time, you have to go through a verification, which is a combination of taking a picture of your driver's license or a government issued ID. Many of them are moving to biometric authentication as well, where you do a face-to-face compare. So take a picture of my ID, take a selfie, and then do a compare to make sure not only is the ID not been manipulated, but it truly is mine and I am the person that's moving forward. We're also seeing prompts for things that may be categorized as high-risk transactions, doing another verification. And then, as I mentioned before, on disbursements. So if you've got, with a lot of the cryptos now, you can stake them and you can loan, you can take loans against what you're staking in your crypto. And I know somebody that, clearly he's, at a different phase in his life, but he was telling me about a story where he had made some money on crypto, he had staked it, and he wanted to take out a $2 million loan. And he literally, by just a couple of verification steps, and 2 hours later, $2 million was in his bank account. And, you ask yourself, in what world could we ever have conceived that to happen so quickly and to happen remotely? Now, data, back to our conversation, data is the foundation of whether it's deterministic data or it's probabilistic data, and ideally a combination of both that allow whether an exchange, a financial institution, or any company to make those real-time decisions.
Mm-hmm. Let's talk. Well, wow, I'm still thinking about the 2 million.
Admittedly, I was like, okay, well, I hope someday.
Healthcare. So, yeah. I mean, in healthcare, of course, there's such sensitivity about healthcare data, right? Certainly payments are moving online, but increasingly so is patient data through patient portals. Yeah. For the convenience of the patient and the doctor, and the portability, frankly, of that data for the patient. But what are you seeing in terms of best practices for making sure that piece of the healthcare ecosystem, patient data, is in fact protected and scammers aren't trying to get access to that data for one reason or another.
Yeah, I mean, we just did this report with you, Karen, and I think it was one of our better reports that came out with some really interesting data. And first and foremost, that healthcare data is, I think it was 40 to 50 times more valuable than financial data for the fraudsters. And I think any just, layman person looking at this would say, well, why does anybody want someone's healthcare data? Like, what are you going to do with it? But it's the data itself that allows you to create an individual or to impersonate an individual that therefore you can defraud financial systems, or you can defraud other types of systems. And so it is incredibly valuable. And you're right, even in the last 6 months, talking to a number of disruptors in the healthcare space and even traditional providers. We actually just had a call with a large provider in the US yesterday, and they have assembled just an incredible team around this notion of, okay, how do we understand an individual, and how do we understand, share information internally, but also share information with appropriate parties, whether they're insurance providers or they're payors, so that you don't have insurance fraud. And so they're taking a very active step in doing this. I'll tell you, telemedicine was interesting to me over the last year because I had a couple of appointments like many. And I was asking myself, like, how did they know it was me? I call, make an appointment, they're like, they send me a link. I mean, I could have done some SIM swapping on my phone, where they would have sent me a link to the appropriate number. And then I get up and they give me a great healthcare service. Again, how do you know? There's so many people in society that don't have healthcare right now. And so by defrauding the systems, you can give other people healthcare. So, long-winded answer, the information is incredibly more valuable. There's more attention given to this. And it's not just at the patient level, it's at the provider level. You have to make sure that doctor has the credentials to be giving you the advice that you're looking for. And it's also at the subscriber level and insurance level as well. So I'm excited actually to see the transition in healthcare, because you look at the ability for healthcare organizations to provide a service like the commerce providers have done now. And I just think it's crazy to say in the healthcare sector, but much more delightful than it's been in the past. And I think the ability for people to pay for their services when they're not insured are going to become much more creative as well.
I think obviously the accessibility and the access to qualified good doctors, when you have that remote relationship, you don't have to physically be at a doctor to great advice. I think that's exciting. Let's talk about the sharing economy. I mean, talk about a stunner. So sharing economy, whether that's a vacation, travel, rental, or ride sharing, there's a lot of that. Data that we've uncovered, 72% of people who use sharing economy platforms are only asked for their email. Now, that seems to be certainly for ease of convenience, right? I mean, no one really wants to get in the way of sign up or usage. But if you are a passenger with a driver, or if you are a owner of a vacation rental property, don't you want more than just an email address before you?
Absolutely. And it's shifted. It is changing, and it's changing before our eyes. I mean, just out of respecting the customers that we have, but you can probably draw some conclusions. In the mobility space, we started to see that change pretty drastically. I do think this is public knowledge, but Uber was seeing a tremendous amount of violent carjackings, and they were looking at some sexual assault issues and things that you would never want anybody to have to experience as a rider or a driver, because it can happen on either side. And that, coupled with their expansion in a number of cash-based societies, they put together a program called, I think it's called the document program, like the document scan program. Forgive me, I forget the reference to it. But because they did that, it effectively drove statistics that they did not want to be part of their platform down to zero. And part of that is because it was fraudsters aren't going to provide that information about themselves, and they're going to have to go to a pretty lengthy degree to create a synthetic ID in order to use that on the network. And anything that's a new account, that hasn't been harvested and hasn't been developed over time, is going to send a red flag. And so you're starting to see requirements more than just an ID. You're starting to see a need for biometric checks at times. I think there was a point, particularly in the early days of COVID, when some of the mobility players were coming online, that individuals were getting in the car and they didn't have masks on, and the drivers weren't comfortable with that. And so being able to verify that the mask is there. So I do believe that the day of just an email address is long gone. I could see a world where the notion of email and mobile number just at sign up is still acceptable. But as you go to book, and then not only after you go to book, as you go to actually arrive at that place or to get in the car or rental home, again, verifying that it's you is incredibly important. And look, Airbnb's taken some amazing measures to ensure that people who are renting a home for one night and have no intention other than having a party that could lead to, just life-changing events, doesn't do that anymore.
Yep. And I think all those things are great. And it's the ability to use, sophisticated tools and data detection technology to stop those things. Well, it's social media. So
we're playing a little bit of roulette today. Topic roulette. Why not? I guess.
Sort of popped into my head, but so many things to talk about on social media, right? I mean, one of the things, I was talking to someone about this the other day, there are so many games on social media that are designed to harvest data about people, right? The street where you lived on when you grew up, of course, all fodder for, KBA questions for those who rely on KBA questions so that the fraudsters can impersonate your identity. At the same time, wanting to make sure that those who are signing up as new users are in fact people who are using the network for the purpose for which it was for which they are intended. How do you solve for that?
Well, we're starting to see actions being taken now in some of the social media players. So two in particular that I've been exposed to. Twitter came out. I think you may have seen where you can get the blue check mark. So the blue check mark on Twitter for some time was really accessible if you knew people at the company or your celebrity or others. And so taking it, particularly after what happened with misinformation, as well as, I wouldn't say just misinformation, it was the social channels became such a mechanism for sharing information about COVID, about vaccinations, about, different perspectives of what was happening with the virus itself, that they realized this need to verify more than, what had traditionally been done. And so they went through a test pilot, where we're a partner of theirs, where they're using the blue check mark to become verified. In addition to that, what we're seeing, India just came out with a new law that had a lot of upheaval, which effectively you can't open up a social account unless you are verified. And to me, Karen, I think those are just two major steps of where we're going to see, a lot of, I don't want to say regulation, but safety measures put in place to ensure that the people who are representing themselves on these social platforms are who they say they are. And very much like the healthcare sector, as we talked about credentialing of, the provider giving a healthcare service, it's the same thing. Like you've got people who are followed by millions and millions of individuals, and they're seen as experts in their space. And if they're to tweet something or to share something, that people may take action on that may put their health, in jeopardy, we have to make sure that doesn't happen. And I saw a stat the other day that said like 60 to 70% of millennials go to the social networks in order to get their news.
I saw that same stat.
Yeah. And they don't question who that new age journalist is on the other end, or who that influencer is or should not be on the other end. And, having two boys of my own, I think about it, a lot. And so safety is taking on a whole new explanation, a whole new definition, I think in the social media space. And I believe we'll see more and more of this. And LinkedIn too. I mean, there's, LinkedIn, I found it to be fascinating through some stats. They have, millions of fake accounts, and they're taking actions in order to remove them. But some of these people, you think, they have a great reputation, they look like great credentials, they've been in the workforce for a long time. And then you may realize like they're actually not real.
Yeah, they're not real. Yeah. But it's a problem. It's good to know that it's being addressed, because I'm not sure that it until recently, the last couple of years, it has been something that has been ignored and kind of up to the network to sort of police or not. And I think it's going to be a very contentious issue for the next few years, particularly when people are arguing freedom of speech, and I'm a believer in that as well. But to what degree, when it comes to impact millions and millions of other people who are looking to someone to vote to their point of view. And so I know that, the contention with individuals being taken off of Donald Trump being taken off of Twitter, and, a lot of other things, I think that will be a big debate that the big techs are going to have to face. But we're at a point in time in society where our reliance on these big brands and these big ecosystems are more and more only increasing. And so we've got to figure out what is the right balance of safety, security, as well as, freedom. And convenience. And that brings me to our next topic. So one of the things that we learned as part of this big study that we did that I talked about at the beginning, consumers are very worried about having all of their identity all over the web. So 66% of consumers said that one of the reasons they want, a more consolidated ecosystem, kind of the single digital front door that allows them access, is because they're worried about all the places where they have, their digital credentials stored or available. And further, we sort of pushed on that, because you can argue that, it's consumers feel like at least one place I have more control over it for privacy perspective, and from, depending on who it is, I trust them. I trust them to take care of my data. At the same time, we ask about trade-offs. So what is more important to you, convenience or privacy? This is the statistic I want to get your reaction to. 86% of consumers said, I want a digital ecosystem like this because it's easier for me. It will make it better for me, more convenient, less friction, more efficient. Only 50% said, I have worries about privacy. It's pretty big gap. Consumers are willing to trade off privacy for convenience. Not everybody. Because there's obviously certain pockets of that where that is not the case, but particularly, skews younger. And I thought that was fascinating, particularly given the debate that's going on today about privacy. And yes, it comes back to, well, who is managing that ecosystem? But consumers, are processing this, and I think in a very different, reasonable way. They want convenience. At the moment, they feel as though they're happy to trade off privacy for convenience, as long as they trust the ecosystem to protect them. So what does that say to everyone who is in this space, trying to sort this out, trying to be that digital front door, whether it's a big digital front door or a smaller digital front door? What do you have to do in order to live up to those consumer expectations?
There's a lot there. It's interesting, the comment of people willing to, give up privacy for convenience. I mean, the reality is we already have.
Yeah.
So if you think about the last decade, we all have. And the reality is our information is already all over the internet. And when you look at the physical interactions we have that may be captured digitally, it's multiplied. And so I think we are living in a very convenient world where, our expectation is instant gratification. And the fact that I can order something from Amazon and it shows up, within 12 hours, if I pay $3 more, it's hard to go back to something different. That being the case, whether that is the sentiment now, which clearly your report indicates it is, I don't think by any means that any of us who are providing services and goods to these consumers need to forego the importance of privacy. And it's our responsibility to continue to find a way to keep information private and to protect it. Because the reality is it only takes one breach.
Yep.
It only takes one experience, a negative experience, for those 60, 70% consumers to say, you know what, I prefer security over convenience. I prefer privacy over convenience. And I think part of the issue that I've seen is many people don't even know that their identity has been stolen. And they don't know that until there's a moment in time where you're questioned, or you need to go for a loan, or you need to somehow verify yourself in a deeper matter. And for something you're trying to get access to. And so the question I have is, do people understand the implications of picking convenience over privacy? And I'm not sure they do yet. I mean, my kids don't. I mean, they may now, because I've made them become students of this space and what it means. But I read a stat one day, or I was maybe a podcast, where someone said, 70% of what you need to create a synthetic ID, you can get on someone's Instagram account.
Yikes. Not mine, by the way.
Not mine either, nor Facebook account, because I don't do that. But we're the atypical, Karen.
Yeah.
We're not the norm.
Right. But don't you think, I mean, if you take this comment a different way, doesn't this support the vision that you have, which is, there is an opportunity for this, digital credentialing to create convenience and privacy? You're talking micro identities, where I'm giving out just enough information, but I have it where I feel like it's controlled. I think what people don't feel that they have control today is having so much information spread.
Yeah.
So, I mean, I just wonder whether consumers are kind of where you are and we need to catch up.
I think they are, but they don't know the implications of it. Like, I think where you and I are able to sit is, you can have convenience and privacy because the technology exists. Like, the technology exists to do this. And it's just a matter of who are the entities that are going to come together in order to create a platform where you can have distribution and independence while also creating privacy and protecting people's identity. And it's about adoption. I mean, it's like anything in the world. Like, once you get the adoption going, and typically you create that network effect, like, you can make that happen. But let's be clear, like, when you go to the airport today and you use Clear, you're effectively already in the Minority Report, example from, years ago with the movie, where, they're doing, a facial recognition check or a thumbprint check, and you get to pass the line and move forward. And so elements of this already exist in our world today. But I think you keep honing back on the point, which I agree, which is, how do you give an individual control of their own identity so they can make the choices of what to release and when, and to revoke when they no longer want to have a relationship with a secondary party or a third party. And that, again, tech exists. It's a matter of, I think, all of us getting there. So
what does that journey look like for all of us getting there? And how long is that going to take? Because I think consumers say, clearly, I want this. I may not want everything connected in one ecosystem. Healthcare, people are very focused on keeping that separate. But people like the convenience of having, a lot of these things assembled in an ecosystem where they trust. So how do we get there? How long will it take?
I wish I was an oracle so I could give you that answer. I would have said 2 years ago, probably about 10 years. And people would have thought I was being overly ambitious because I tend to be overly ambitious. But I actually think in the next 5 to 7 years, we're going to see drastic shifts. I mean, we're seeing governments who are issuing identity, government issued credentials, testing it even within the US, interestingly enough. Some other countries have been doing it for some time. We're seeing digital wallets, identity wallets emerge. So identity wallets was something that was tested 5-7 years ago. I mean, there's a whole host of skeletons that tried it and died, and consumers weren't ready for it. I also don't think necessarily because you have to have a recognized brand and a third party, time and experience wasn't there. Right. But the emergence of an identity wallet, I do think could be, on the horizon. Back to, I think, the earlier part of the discussion, you take someone like Microsoft who, I don't know, they have like something like 900 million users that log in, I don't know if it's every day or every month, into their services, because they span the work, life, and play aspects of it. And because they're already in the work environment and can provide this verification, they sit in a very different position than Okta does. I mean, Okta has great services that a lot of us, including our company, use in order to connect and enable single sign-on. But they don't have what Microsoft has, which is the ability within the play space, whether it's Xbox and others, and in the personal space with Microsoft Office and the OS. And so those big players getting into the space, Karen, I think are only going to accelerate us, where we'll see more and more of this over the next 5 years.
And I also think that there's a focus now on the part of the administration to expedite this, and the role of, to your point, public-private partnerships in driving this forward, because it has to be the collection of the collective brain power of public and private individuals coming together to solve.
Yeah, I mean, and the government, I think, has more of an incentive to do it than they ever have been, particularly when the inability to verify who someone is and the claim that they made, whether it's for PPP or the unemployment. I mean, they've lost upwards of $400 billion. And so you look at the economic impact of trying to put taxpayer dollars to a good place, to help us all get through this horrific crisis. And some people either took advantage of that or the wrong people got it. And so there's economic incentive now, I think, to do this and to do it right. And it will have to be the public and private sectors coming together.
Carrie, I think we could talk more, but we'll have to save it for the sequel.
Okay, I like that.
This conversation. There will be a sequel for all of you watching. There will be a sequel.
And we may be side by side. Who knows?
I know. Wouldn't that be great? Well, listen, it was a fantastic conversation. I think we covered a lot of ground, and I think raised a number of really important points for everyone across the payments identity ecosystem to consider. We're getting closer to a place where consumers feel confident, relying parties can feel confident, and platforms that enable those connections can feel confident that they're doing it in the right way. So as always, thanks, Carrie.
It's a pleasure. Thanks, Karen.